Hello, welcome to Todd Miller TV. I read an article recently that said that home prices are going up, and this is the first quarter that they've gone up nationally in a long time, actually since 2005. The largest percentage increase, which is 7 years, which is really great. So the question I get all the time is that going to continue? And the reason people want to know that is because they're investors, they're buying, they want to buy and have the home appreciate. So let's start with fundamentally, why do home prices appreciate? Home prices tend to appreciate based on a couple factors. One is employment. If a lot of people have employment, or if employment gets better, you have more people with steady jobs to be able to buy a house. And then if they do lose their job, that you tend to have, it's easier for them to find another job. When you have high unemployment, you have less people employed, and if you do lose your job, it's harder to find another one because there's a lot of people looking for jobs. Okay, so the first question is where does employment stand? And historically, it's really poor. Historically, it's much below. So it's not because we have great employment. So the next thing you're going to ask yourself is, well, what about increases in income? Cool. So the next thing is, if people are starting to have increases in income, home prices go up. Because as their income goes up, they can afford more in-house payments. And the truth is, income right now is not going up. Incomes are steady or slightly declining. So then you have to scratch your head and say, well, if we have high unemployment and incomes aren't rising, why are prices going up? Well, it's very simple. Right now, 5 to 10% of the population is a distressed homeowner. That means they're upside down in the house, or that they have stopped making payments, and this is nationally. In some markets it's much higher, in some markets it's much lower. And what that's caused is it's caused banks to control the property flow a little more, especially here in Nevada. And so what's happened is we have an artificial low inventory. That artificial low inventory has caused a temporary increase in prices. Now, we don't know if this is going to continue. If inventory stays low artificially, it could continue to rise, or it could level off, or properties could start coming back in the market and it could decline. But the bottom line is there's a lot of factors here. So really what you have to look at are the numbers. The numbers are this right now. If you're buying a residential property as an investment property and you're going to rent it out to somebody versus having your money sit in a money market for 1%, are you going to get better than 1%? And the numbers show that you will probably get a gross of 12 to 15%, and you'll net 8 to 12%, somewhere in that range, on your money, which is pretty good. You're not going to get that anywhere else. As far as whether home prices are going to go up or down, nobody knows. Long term, we're below the long-term trend. We're way below the long-term trend. So we might get a short-term decline in prices. We might not. But I just wanted to sort of share that with you because I don't know that just because prices are going up, they're going to keep going up. There's a lot of factors that are involved in that. And we really don't know. We knew a year ago that they weren't going to crash because that's what we were being told they would crash. But we kind of could see they weren't because we just didn't have enough inventory for prices to crash. We could see tons of people making offers on properties, and that's what we're seeing right now that's causing this maybe it's a mini bubble, I don't know. I don't want to make that prediction because I can't tell you in a year if prices are going to go down. I do know this, in the last year I have bought investment properties and I'm not looking at selling them right now. If I did think prices were going to go down in 6 months or a year, maybe I would try to sell them and wait a year and then buy again. Some people are doing that, but then again, the transaction costs to go in and out of a real estate transaction with commissions and things like that are pretty high. So you have to lose a lot of value potentially before that made sense. So that's sort of my update for Las Vegas investor properties and whether prices are going to go up or down. And I know that's very nebulous, but fundamentally prices go up. If you're going to buy long-term in real estate, this is what you need to know. When you start seeing jobs reports where there are more jobs being created and unemployment starting to drop, that's when you want to get in long-term. That's when you want to buy a bunch of houses and hang on to them for 5 to 7 years. Just keep them as rentals because you have a greater chance over time of those things being worth something. And then the other thing we have to hope is that interest rates stay really low because people are now used to paying 3 or 4% on a mortgage, which is crazy low. They just can't go any lower, right? The Fed already has I think the discount rate is 0.5% or something crazy. So it's going to be very difficult for them to lowered the interest rate in a meaningful way. So anyway, that is my update for today, and hope to see you on another video. Thanks.